Okay, good morning, everyone. This is Julie. Good morning. It's Saturday, November 5th. This is a look at my website, and if you haven't looked at the About page to see what I'm all about, take a look at it because I do have a methodology that I recommend that you use with my trading templates to identify a trending market and then setting the bar type to the volatility. And then taking the trades on the lower time frame chart. So it's a simple three-step process, step one, step two, and then I'll show you step three. I mean, first you have to really identify the trend, set your volatility, and then go to the lower time frame. So I think I'll change this to 3 steps, make it a little bit clearer because people are still having a little bit of confusion on how to do this with my system. So we'll walk through all of it and I'll get you set up right now in this webinar. So let's look at the disclosures first on the website. Before trading my strategy or anyone's strategy, be sure to be aware that there are disclaimers about futures trading being extremely risky and the hypothetical performance disclosure that are stated on the website. Okay, so the first step really is to identify the trend. And once you get a inkling of how the markets are moving with the trend, you can go to that market, open a chart, and try to fit the volatility bands. When a market is changing, like the British pound is changing, it's been rallying up after that court announcement saying that the Brexit cannot be a hard Brexit. They're going to have to work on settling some of these contracts and agreements before Brexit can take place. That gave the relief to some of the British pounds. So that went into a transition from an all down market to now it's transitioning back up. So if you wanted to take that trade to the upside, you know, absolutely the weekly's not there, but knowing that you had an economic event that changed the direction, you know, I'm not so hard and fast with my rules to say you're not permitted to do that. Of course you can do that. I trade off my economic calendar all the time. That's why it's on my website. And I highly recommend that you be aware of what's on that economic calendar that can affect the directional path that these instruments are trading on because it changes all the time. And I have my higher time frame, weekly, daily, 60, 15, really tricked out to that fast higher time frame trend because I want to know when it's all in one direction. That's when I want to go to that market and start hitting it in that direction. So the first thing I do is when I identify a market, like right now I have identified the crude market, I'm going to start with a higher time frame trend and put it on a 24/7 chart, default 24/7 with the JATS direction guide BloodHound template. So let me pull that up for you. I'm opening it. Give it a few seconds to populate. And that is going to be step two. So step one, we identified here that crude and nat gas were in all 4 directions, weekly, daily, 60, 15 to the downside. So it takes the pressure off. We're not going to be looking for counter trend trades. We're not going to be looking for bottoms on levels. We're going to be looking for pullbacks and trade them to the downside because my strategy and the way my templates are set up on that lower time frame is to take advantage of the higher time frame trend. CTAs, the most successful trading strategies that hedge funds use with CTAs are trending strategies. So that is it's already been a very proven strategy to try to incorporate with your trading. So try to find a trend. So this is the direction guide template, and I've got it set up so that you can set it to the market that you're in. It has a solver in here for the regular trading hour session that will tell you when the market is trading in the direction of the open to the close on that RTH session. So that solver's on the top. Then you've got your prior day high or low and your current day high or low. You always want to be, expanding your ranges on both levels, and when all four start, the direction, the open to close, the prior day high low, and the current day high low, they're all firing off in the same direction. Let's put that over here. So you got your bar here. You keep going. You don't stop at your short-term day time level. You keep going. That's when you know to start hitting it and reach for your second levels. And so I put that on your template here. When there's nothing in the middle, you get choppy sessions. So see right here in the middle, there's nothing here. It's choppy. So you can find a market that is weekly, daily, 60-15, and your higher time frame is in the same direction. So we had a bit of an up and down Friday on this. So it's not the best example, but when you have a weekly, daily, 60-15 to the downside, what we want to do is we want to set the volatility. And so this is what I do with my larger unit wrinkle bars. And I start walking them up and down, trying to find that volatility to fit the pattern. So you can see that this was an up and down day, very choppy. So the time to trade this bar would have been from 8 o'clock in the morning to 9:30. So from 8 o'clock in the morning to 9:30, we were in a down pattern with our volatility bands, matching that higher time frame trend. Once that condition is over, my template flips and you're not to take any more down trades. Here we got another short time period where the market did turn back down, and if you wanted to try to take another downtrend trade, you could, but you could see that the VWAP band's up here, so I would not have taken these trades. I would have waited for a price to hit the VWAP and then engage in the market to get back in. That's in my trading VWAP methodology that I incorporate for support resistance. I use VWAP for support resistance because the big institutional traders use VWAP for the support resistance. So this downtrend here at 9:42 a.m. was the one that you wanted, and as you can see, it lasted until the close. So this would have been a very high probability profitable trade location to get into at your support resistance, at your resistance, getting back in the direction of the weekly, daily, 60-15. So it did not have the volatility bands, though. We were in a retracement, in a bull flag retracement from a downtrend. So how do you measure that up on your lower time frame chart? Well, let's put the second chart up here, the third step 3 component, to take those inflections. We can add the high-low inflection chart that comes with the template. So I will add that. Just a second. Right now to the panel, and you can see very easily what this would look like to take those inflections and try to get positioned using the volatility with that higher time frame trend and momentum to take your lower time frame trades. So here is that chart. I'll go ahead and open it up. And when we know that we want to take, here was that actually breakout, fake out. On the lower time frame, but the higher time frame would have kept us in the trade. And this green band, by the way, that's a volume profile level I put on my charts that the algos are tied to all the time. But I would put this on my reversal short, and there you go. There's my signal. It's just like magic, isn't it? So here you would have gotten in for a short-term trade to the top of the volume profile where it bounced, my river of gold. For any of you who follow me, I use the 25% value area, and it bounced back up. Let me put the reversals on here so you can see it bounced back up here. But I'm only looking for the shorts. So this would have been my signal to go back short. And again, like I said, it lasted all day. It ended up, my data stopped at 13. It actually kept going to 1330, but a very successful trade off of that signal. Sell high and buy low, right? And we're right below the PPOC. And for those of you who know me, the institutions trade above and below that prior point of control. Let me put this on a 30-minute chart so that you can see it. And I'll explain my support resistance that I use with my trading and VWAP. Let me get all these markers off so you can understand my chart, what I'm trying to show you. I use a 25% value area, which is the yellow. I call it my river of gold, and I use it like a pivot. In a downtrend, I prefer that price be trading below that pivot, like it was over here in the beginning of that downtrend, thrusting out of a level. And when price is retracing, what it often does is it often will come back and check that prior point of control and then continue down. This one didn't even get that far. It was very weak and turned at the standard deviation of the VWAP. But yesterday we came back up to test just under that PPOC and then turned back down. So maybe you could see it better on a 5-minute. So I use volume profile and VWAP as support resistance. These indicators are not included with my template. They're third-party indicators. I think you can get VWAP for free. Well, if you join Futures.io, there are VWAP indicators available for you. And NinjaTrader, however, does not have a market profile indicator that I have found that I liked that was available for free. That's why I purchased a third-party indicator. But I'm just using it for support resistance for obvious reasons. And as you can see, institutional traders will move price at these levels. And when you're looking for reversal shorts, when you can get a touch on a VWAP level and that it turns, that's a good indication to take that inflection versus this inflection. But and I have other solvers that we'll go through, and these solvers are set up to turn when the volatility is there. To go with volatility. Otherwise, I have a solver that just says get me short, but these are set up to get you in the volatility, in the market, in the direction of the volatility. So the first step to the program really is to find out what direction to go. Let me put this back on my Unirenko real quick. The first step is to find out what direction, what market and direction do you want to trade. So we want to trade crude. So then we go to our larger Unirenko and we identify when price is moving in that direction with the volatility. Do you see this was moving down but not with the volatility? The volatility was up below it. That's another reason not to take the trade, but you can take that trade when you get your support resistance level. This has the volatility. This is absolutely when you want to be trading short. When you've identified your volatilities there on your higher time frame. And so if you just were patient and waited for the volatility to roll over on the higher time frame, you would have been able to get into this last leg down after 11 a.m. into the close and take advantage of when price is then getting out of this flag and resuming the trend. So I use my volatility, momentum, and direction. So here's the volatility band I want you to be. It comes on your chart, and I help you with these settings when you get my templates. So you get your direction on your higher time frame trend, you match your volatility on your lower time frame chart, and if you don't like the 520, you know, I have other settings that we can use for those higher time frames that I like to check out. There are other settings that I will use. A 9-18 will work real well with that 3-6 bar combination. To get price set up on my first level of volatility, that's the first step that you want. You try to get it to fit. And once it starts fitting in that volatility band and going and printing back in the direction of your trade from the open to close, get back involved on the lower time frame. So, you know, trading is a matter of patience and waiting for your patterns to align. And then once you get the alignment, higher time frame trend, lower time frame volatility, then you go into the micro and you use my templates to take the trade, to pull the trigger. And I have several different, if you want to see exactly how price is trading, tick by tick, up or down, if you would like to see just your short-term trend opportunities, this is set up with the volatility bands. Or if you're like me and you're just looking for those places to engage on that higher time frame, oops, wrong one. Here we go. Higher time frame to get back in the market, I've got my signal. So I just wait for my signal. Or if I miss the signal and I want to wait for a pullback after that first signal, second mouse gets the cheese. Here we go. If you enter in the first one and get knocked out by a tick or two, don't worry about it. That's what the market's supposed to do. You were coming right into your lower volatility band where it's supposed to react. So I've got my volatility bands to show you not to worry. And boom, there it goes. The second mouse gets the cheese and got through it. So, but otherwise you just sit there and you hold your point being up here, hold your trend. Oh, this one. There it is, sorry. And here's your next one. And as long as that test holds, came back and tested and it went back through it to the downside, you stay with the trade. That's your trending condition set up for trend continuation. So you just take your short-term profits. Crude will always give you 10, 20, 30, 50 ticks, sometimes 100 on a good day, range expansion if you can get in at the top. So once you realize what you're looking for on the lower time frame, after you find a higher time frame trend trending in your direction, then you know that you're not going to be hitting counter trend trades. You're going to be waiting for locational entries on that lower time frame and try to get back in on these crude trades. Several different ways to fit this up. If you don't like the 3-6, you know, you can walk them up or down to fit your methodology. I would recommend trying to start out with this left one, trying to walk it up or down. And different methodologies on different instruments that I'll be glad to discuss with you. An 816 is a fairly nice one that works across the board on several different instruments, including the E-mini. So I have these patterns already researched that I like to use with these markets, and we'll be glad to go over that with you when you become a member and purchase a template. So trading as simple as 1, 2, 3, you can see how difficult this is when a market is not trending perfectly. As it was not trending perfectly on Friday, we had that bull flag and then it came back down. To get a trending market, that would have been a perfect trade example, would have been over here on November 1st and November 1st. Well, that kind of got bumpy too. October 31st, look at that, just a straight flush down. That's what we're looking for. Do you see how it's trailing the bottom of this VWAP? And we have never came out of my first level of my volatility. That is a picture perfect trade on Halloween, October 31st. So let me show you what that looks like on the lower time frame. And this is the part that disclosure on my website pertains to. This is in hindsight, and I can come back and show you what I'm looking for. But do you see how it lays out just beautifully on the lower time frame? Each one matches those shorts on these pullbacks just perfectly. So that's what we're looking for to engage the market, because then it's just like butter. Then we know that we can come in and grab those trades on the lower time frame because the market is in a trending condition. So that's what we're looking for. It's like fishing. It's like getting in a boat, sitting in the water and waiting for that big fish, like my husband's cousin Keith does. So here are my fish, and I get in my boat on my lower time frame chart, and I know what I'm looking for, and I place my hook in the market and I grab those trades. And there's many different things that you can look at on my chart. The volatility bands, support resistance. If you didn't have support resistance in the VWAPs, don't worry about it. You don't have to have everything. You just have to have a knowledge. Take up all these other indicators. So if you just have you get the volatility bands and the candles, and the most important part, you get the momentum indicator, volatility bands, and the BloodHound templates. That's all you need to be able to place trades. Now I incorporate the support resistance with my other indicators, but this is really all you're looking for. You don't want it to break that volatility level. You want it to turn on this upper volatility level, and I'll go over that with you when you purchase the template. So there was a picture perfect trade example right here on October 31st. I think that was a Monday, and the market sold off. So that's what our goal is. That's all we're looking for, and that's how to identify it on the higher time frame trend. See what you're looking for on the lower time frame. And again, I can take off all these other indicators, remove them so that they're not distracting you. And you see how it follows within that lower first volatility band on the higher time frame. You know, Rinko, that's really what we want. When we get that pattern condition, we can take it on the lower time frame, or even if you like trading the higher time frame, let me show you something, guys, which will blow your mind. You can take them on the higher time frame even better and just hold your trades. Look at that. This is on the direction guide template. Not bad for an old girl, right? Fishing her entries. So trading can be as easy as 1, 2, 3. You just got to know what you're looking for and how to set up your chart to get it. So this is Julie, JATS Trading Strategies. Hop over to the website, www.JATS Trading Strategies, and pick up a BloodHound template today. Thank you so much.